G'day everybody, this is Johnny Sewell from Acorn Wealth Corp, and this is your executive summary for stocks set up for Wednesday. As you can see, the S&P 500 has been pretty uneventful, going sideways this entire time. So we're yet to really see a direction take. Now, the bias has still been to the negative, given that we've had a negative open range. So it's still based on the rules of open range. We're going to close on the S&P 500 between these two orange bars, basically a tight range, come Thursday's close. Now, what happens then on Friday is a new range is set, and obviously, if we close higher or lower than Friday's range next week, is going to be the indicator of the S&P's direction or bias for the first 2 weeks of February. We've obviously issued a bunch of hedges, things like RGNX and QCOM and so forth. We did have some questions in trading room about what types of longs we would look at if between now and then. So we did have a couple that don't look too bad. These may just be watches until next week, but certainly there's some interesting qualities to them. This one is ABDC, and this one is again, you can see there's the momentum trying to build here. It seems to have gotten across all of its moving averages and just now needs to break out of this resistance. So with any of these kind of long setups, I would be looking for breakouts, just simply because we're not sure of where open range is going to go yet. So by waiting for the breakout just gives a little bit of extra probability that the move is going in the direction you want. So, for example, for this one, I'd be looking for a break above $7.15, and I'd consider a stop signal of 663 just underneath the most recent turning point. This would be a momentum play. So basically, let it rally and just continue to update the stop loss behind it. We also had another one, FII, which was a possible wedge breakout that our coaching team found. So this is just, again, a short-term potential pop. If it breaks above 27.21, we could be looking for a target of 28.93. It could go higher than that, but we've just looked at the more conservative side of the target. So just a short-term pop, and we'd look at a stop signal of 25.97, sorry, 25.87. No insider trading on that one. BIOL is a much more speculative setup, a bit lower volume, but as you can see, it's been really ramping up recently. So possibly a speculative long here. I'd be looking at a stop signal of 137, but with a longer term momentum play potential, this one does have some insider buying. So again, with a momentum play like that, you'd be looking at just like obviously updating the stop signal and so forth as it rallied. But the short term area where it's going to run into some issues is going to be right there around 184. So could consider a partial profit take around, say, 183. You've also got ADTN. This is more of a flag setup, looking for it to break above 1480. I'd be looking at a stop signal of 1343, and the target here we're looking at a 1667. And last but not least, VSM, also a potential flag play. Big move yesterday, consolidating today. So if this one continues to break out and break above 38.07, we could be looking here at a target of $40.73, and I'd be looking at an initial stop of 35.83. So there it is. Again, with being so close to open range, I wouldn't be looking to take big positions in anything. Just kind of these are some plays that might have some short-term potential, and if open range ends up turning bullish, these may be able to continue going to further highs. So take a look at that. But again, the main thing between now and the new open range on Friday, and then the signal coming next week, is just I'd be cautious. And personally not looking to make too many new trades until we get that new direction. But those are a couple that we talked about in trading room that wanted to relay to you. So there you go. Happy trading, and we'll see you all soon.